This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's crude oil imports rose 4.88% in November from a year earlier, government data released on Monday showed, with daily import volumes reaching the highest level since August 2023. The world's largest crude importer brought in 50.89 million metric tons of oil in November, equivalent to 12.38 million barrels per day. BPD, up 5.24% from October, according to data from the General Administration of Customs. China imported 521.87 million tons of crude oil from January to November, up 3.2% from the same period last year.
Oil prices declined on Monday as investors monitored ongoing talks to end the war in Ukraine ahead of an expected U.S. Federal Reserve interest rate cut this week. Brent crude futures fell by 57 cents, or 0.9%, to $63.18 a barrel by 10:53 GMT, while U.S. West Texas Intermediate crude was at $59.48, down 60 cents, or 1%. If there's any kind of agreement reached in the near future on Ukraine, then Russian oil exports should increase and put downward pressure on oil prices, said Thomas Varga, oil market analyst at PVM.
Moving on to the top news in the energy sector.
India's fuel consumption climbed to a 6-month high in November, rising 5.5% from October to 21.27 million metric tons, according to data from the oil ministry. India is the world's third largest consumer and importer of oil and the largest buyer of Russian seaborne crude, taking advantage of discounts on Russian oil as Europe and the US shun those barrels over Russia's invasion of Ukraine. India's fuel demand rose to its highest level since May in November, climbing 3.0% from a year earlier, data from the Petroleum Planning and Analysis Cell showed on Saturday.
A Chinese refinery operator whose main business was disrupted when it was sanctioned by Washington in May for buying Iranian oil is pressing ahead with a $3.6 billion petrochemicals expansion project. Two people familiar with the plan said. The construction taking place at the Xinhai chemical site in North China's Guangzhou city underscores how the country's independent refiners, Iran's largest oil customers, managed to maintain their business despite falling foul of expanding Western blacklists aimed at curtailing oil revenues to governments including Tehran and Moscow. Early last year, parent firm Hebei Xinhai Holdings Group announced a 50 billion yuan, $7.08 billion, plan to transform the refiner into a chemical producer, state media reported. Next, we have the top news in metal markets. China's iron ore imports in November fell for a second consecutive month, by 0.7% from the prior month, as buying appetite receded after several mills started equipment maintenance amid thinning profit margins. China brought in 110.54 million metric tons of the key steelmaking ingredient last month, data from the General Administration of Customs showed on Monday. That was less than 111.3 million tons in October but more than 101.86 million tons in the same month last year.
China's rare earth exports jumped in November, the first full month since President Xi Jinping and US President Donald Trump agreed to speed up shipment of the critical minerals from the world's largest refiner. Exports in November jumped for a second consecutive month, by 26.5% from October to 5,493.9 metric tons, showed figures from the General Administration of Customs of China. Whether increased shipments to the US or Europe powered that jump will only be revealed when the Customs Office releases a country breakdown on December 20th.
We will now look at the top news in the agricultural sector.
Chicago soybean futures on Monday fell below $11 a bushel for the first time since October amid uncertainty over whether China will buy as much U.S. supply as Washington expects and as traders awaited direction from U.S. grain forecasts and an interest rate decision. Corn and wheat inched up, supported by U.S. Department of Agriculture projections on Friday that American farmers will plant less of the cereals next year and shift some area towards soybeans. Price moves were limited with traders awaiting the USDA's monthly supply and demand report, as well as a U.S. Federal Reserve interest rate decision that could weigh on commodities via swings in the dollar.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.